Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linen Associates with your financial market wrap-up. And this is for Monday, and we're pushing 5:40 p.m. Central Daylight Time on the 26th of June, 2017. I'm very late today. It's because I blew everything on my charts. I erased them by accident, but I erased them in such an efficient manner, I couldn't get them back. That's what I call good work, right? So for hours, I had to rebuild them, so excuse me on that, but it's the way it is. Now, President Trump had a good day. The Supreme Court said, hey, within certain guidelines, he is the president. Until we review the case further, his rules stand. So, immigrants can't come here if they don't have family relatives, a job, blah, blah, blah. If you're just trying to get to the U.S. from those 6 countries, isn't going to happen, at least temporarily. We just saw the president have a good press conference with Mr. Modi. I understand that the CBO has come out with this health care plan, and it's looking, the cost-wise at least, it's a reduction. The problem is so much of it really hurts poor Americans and so on. I don't know where it'll go with that, and that becomes the issue for the market. Now, as you can see, the gold markets are down. Stock indices are rallying up a little bit tonight. And as we come here and look at the NASDAQ, well, I can step back here and you can see how the market had this one correction last year at this time. Yeah, it's had others along the way, but I just wanted to give you an idea of the thrust of the market. No more than that, my friends. Not saying that was the low. I can make an argument November had a low. I just wanted to give you an idea where the market's at. Now, when you look at the daily bar chart, you see this big area of resistance, 5,900. And since that point in time at the beginning of June, and we're only a couple of weeks later, so don't get me wrong, that's not big history. The market spent its time dropping about 300 points, just had a rally back, and it failed to really carry through. Yeah, it was only 50 points away, but it didn't carry through. When I take a look at the swing lines, they are in an uptrend. You have a pattern of higher lows and higher highs. So until you take out this low right here, just over the 5750 area, the trend of the market is still up. The market battle is taking place against the 18-day average of closes. Now you've hit it 1, 2, 3, 4, 5 days in a row. That is a sign of a battleground. And when that occurs, what happens are the Bollinger Bands, which is an algorithm designed to keep the market trading within them, they start going sideways through here. Now, they'll tighten up if the volatility of the market, in other words, price action, narrows in. If they don't, they'll stay there for a bit. But this gives me an idea that the resistance is back at 59.25, and to get there, you got to go through these highs. If the market continues to slip, 56, 57.5 is the support zone. Middle ground is right where we're at right now, and momentum is gone flat. So here's how I'm defining the market. It has got the swing line up, but prices are staying under the 18-day average. The two fight each other, and you have nothing. And then momentum has gone flat on you as well. It's a market that's sort of stuck in the middle of no man's land. In the Dow Jones, you're in an overbought condition. Now, markets that have what's called embedded readings. That's when the red and the blue line are going sideways, and then they get back under the 80 level, sideways over 80. That often leads to price and the 18-day average coming together. Another thing that I've learned over time is the longer that takes to occur to get down to the 18-day average, the stronger the market is innately. So this market lost that about a week ago and hasn't broken down there. That tells me even though the market's trying to weaken without a trend, the swing line's got a higher high and a lower low, the market still has a bullish bias all about it. In the S&P, the market got up today to the upper Bollinger Band and hit that brick wall. Why? On these black dashed lines, markets only stay above or below them 5% of the time. Now, in order to get them to break out one way or the other, they generally need to get a lot of sideways action. You're doing that right now. And as that occurs, the volatility of price disappears and these bands narrow in. When they break out, they take you by surprise and you get a big move up or down. Will this be the summer break that a lot of people think? Don't know, but you should be on your toes. The trend of the market stays up until you get under 24.28 and a quarter. When you come to the Russell, the market's got a pattern of lower highs, lower lows, still very much in the bear camp. As you can see, momentum has flattened itself out, and prices are over the 18-day average. It's a totally neutral market. Nothing's going with each other. The swing line's down, but the bias is up because you're over the 18-day average, and momentum has gone flat. In the VIX, we have a pattern of lower highs, lower lows. That is bearish. The market got down today, couldn't quite get to the lower Bollinger Band. It hit 968 and the band's 959, and you have this sideways action right here. And what have I said to you week after week? This is a market that's been rewarding the contra-trend trader, the person that is selling the Bollinger Bands, getting back out at the 18-day average. In the back over here for a while, they were buying that band and getting a rally out of it. It's unusual, but that's what occurs. And the whole key here is to recognize when that's taking place. In the bond market, prices are still bullish. They have the embedded reading where momentum is still locked into the upside. Higher lows, higher highs, all bullish about that market. When we come to the 10-year notes, you've got a market that's still got the pattern of higher lows, higher highs. But like we're seeing in the stock indices, the sideways action portends something new is going to happen in the market. And the question is what? As you know, the curve yield has been coming in. Caving in is a good word. And that's often a sign that maybe a recession is around the corner. Something's slowing down. Otherwise, why would the long-term rates keep dropping? People are saying, no, they don't like what they're seeing. So while the Fed can goose up to short-term, up to maybe that 2-year time frame max, the longer term, they're not in control of. The marketplace is, and the marketplace is saying, we don't agree with you. And it's called the curve yield doing this. The bottom end's coming up as the top end's slipping back. In the dollar index, you have a pattern of higher lows and higher highs, caught in this sideways action. This is typical of summer. The sideways action's like a pipe, and prices are spinning around in it looking for a way to break out of it. The flip-flop of that is in the euro currency, which is pretty much in that same pipe. Will it break out to the upside or downside? Today, something happened in the market where you got up with today's high over that high. So now you have a lower low and a higher high. You've lost the trend and you're oversold. You're just drifting sideways as I see it. In the British pound, the market tried a good rally today, didn't get too far. It is still working off an oversold condition. Notice the readings, 27.88, still working that off. The pattern, though, is one of a downtrend because of the lower highs, lower lows. That's how I define a downtrend. Prices under the 18-day average, downside bias, but you are in oversold territory. In the Japanese yen, the market has a pattern of lower highs, lower lows. Is it going to embed? Now, what do I mean by embedding? Let's cover this. Notice the numbers right here, and this was Friday. You had a 15 and a 21. You have an 866 and a 1711 as of the close of business Monday. Remember, even though I'm recording on Monday, we're in Tuesday's trade session, and you can see how the numbers are staying that way so far into Tuesday. If by tomorrow that happens, this market will have converted itself into a big bear market at that point. So the odds favor that right now it's oversold, and you got to be a bit cautious about it. Let's go to the energies. Higher lows, higher high in the crude, losing the embedded reading. Now let me show this. There you're still embedded as of the close of business today. Tonight, as the market's opening, you're losing that reading. I don't like that. If it doesn't get it back right away, you got to step away because prices are saying they might want to get back to that neutral area. What if the market regains the embedded reading? Well, then the bears are going to say, okay, even though the swing line's up, if that's going to hold, the odds are you're still going to be coming down. You're at a very crucial area in the market. Gasoline doing the same thing. The market's lost its embedded reading. Did it lose it during the day today? It did. This is the close, and the market is now confirming that. So I think the bears are under pressure here. If they can't drop the market hard tomorrow, be careful. Now, obviously, tomorrow's what, the API number in the afternoon. Maybe somebody has a feel for what that's going to show. Maybe it's friendly, but this chart is not the prettiest chart. In the nat gas, it's summertime. You're going to expect heat at some point. Even though in Chicago we don't have it, we're not the center of the universe. You're really hot out west. You have the East Coast getting hotter, so you have a market with lower lows, higher highs, picking up momentum. I think you ended your downtrend. I don't think you're in an uptrend. Look for resistance around 313.40, support back at $3 in the market. You know, you watch what I do all the time. What if I could teach you to do it the same way that I do, with a lot of twists and turns to give you what I call my knowledge? That's all that I could tell you. I can't tell you it's an edge. That's not what it is. It's my knowledge, and it's got over 4 decades in it, so been around a very long time. I'm going to teach you swing lines in videos, moving averages in videos. I'm going to teach you how to work with slow stochastics in ways that you don't see here, and I think that they'll help you out with that. The Bollinger Bands, the theories behind it and how to use it in your trading, and then a tool that you never see me do in these videos, window envelopes, another possibility for profit objectives should the market reach them. What I did is I put my knowledge into 54 videos, and in those videos you got about 6 hours total of them. I then give you charting software, which $99 value by itself, so that you can see what I'm doing. You're going back in the data in the video. You're doing the same thing I am. And then you're going to join me on the mornings because I record what's called a subscribers video, and I go through 40 charts, and I'm going to reinforce all these different studies and show you how they're fitting in with what they're doing. Think of it as like sitting right next to me, and I'm walking you through the different charts today and teaching you the theory back then. I don't just open up a chart, by the way. In the videos, you start off with a PowerPoint. I want you to understand the concept. I captured what these look like and how they move around so you get to see how to work with them. The beauty is you can go over it, and it finally starts, ideally, making sense to you. And there's only 5 different tools, so I'm not confusing you. You know why there's 5? I don't want my tools to fight each other. I want them to filter each other. I'm looking for reasons not to make a trade, not to make a trade recommendation. If I have no reason not to, do I have a reason to do it? And if I do, and it meets the checklist, away you go. How do you get all this? You give my staff a call. You can go to our website under the word education, and I'm going to use the code. I want you to use it, IRA20. Let me tell you what that means. I started the new course off. It takes months for me to record it. I started the new course in December. I wanted it for Christmas. It began at $69.95. It's now $99.95, and it's going to go up in price. I used to sell courses like this for $300, so I know the value. I'm able to take the price down because I use the internet. I don't have to produce a CD or a DVD anymore. No postage, no shipping. Everything's over the internet. So the course is $99.95. You put in the words IRA20. The course is $79.95. I think you'll find it to be a good value. $99 software, $60 for my monthly research. Yeah, that's what I charge per, and it's not monthly. It's per 30 days is how everything works. And you get the course, all for $79.95. If you think it's worth it, you give my staff a call, you go to our website, or you can click right up here if you're watching it on YouTube. If you decide to buy it later, I love it, but you're going to be paying me more because the price is going to go up. So you have a great day. I'll see you all tomorrow. Take care now.